All right. Let me go ahead and expand this right there. Oh, it's on the other screen. So, you know what? We'll just keep it on this screen right here. All right. What's up, guys? So, I've gotten a lot of DMs about people who have growth on their account, and then they get into a cycle of just taking bad trade after bad trade after bad trade. And then they give back all the gains that they made in the last month or two in a matter of days or weeks. And so I want to go over the stages of account growth and go over some trading psychology and just ingrain it into everyone's mind, because a lot of people think that, they're going to start with like 5 grand and turn that 5 grand into 50 grand in a couple months. Now that is possible. It's very highly unlikely, and less than 1% of traders can do that. And less than 10% of traders are profitable. So it's probably 0.01% of traders can turn a 5K account to a 50K account in a few months. It's very difficult. So with that being said, the slow gains, the slow steady growth is the easiest and the best and most sustainable path to taking your account to whatever your goal is, 100K, 500K. The slow gains are what's going to get you there. Using half of your account to YOLO into a trade, hoping to hit 100%, is more often than not going to cause you to take like a 30 to 40% haircut on your account. And then it just makes it that much more difficult to get back to where you were. So let's say you start with 5K and use $2,500 per position, and then $2,500 goes down by 20%, and you cut the trade. A 20% loss isn't that big of a loss, but a 20% loss on a $2,500 position, that's a $500 loss, and now your 5K account is down 10%. So let me mute you, Sion. What's up, dude? And so I want to go over the stages of account growth, and there are account sizes where you can use almost a whole account and kind of YOLO, but it's not a YOLO. And that first stage is stage 1A, and this is directly from our course. And so this right here is stage 1A. You start with $100. I tell everyone to start with $100, especially if you're just learning how to trade. When you're learning how to trade, how to execute orders, how to take the right trades, $100 is what you should be starting with, because you don't want to start with 1,000 or 5,000 or 10,000, because you're more than likely going to make some mistakes. Nobody ever starts something and hits the ground running and doesn't make any mistakes. So I would much rather make mistakes with $100, a negligible dollar amount, opposed to 1,000, 5,000, 10,000 or more. So a lot of people come into trading, hey man, I got $5,000. Do you think that's enough to start trading? I would say absolutely, that's definitely more than enough, but it's not the right amount to start with. You should start with $100 while you learn. The hardest thing to learn is the trading psychology. So I'm going to read off of this slide, and we'll just go through this entire PowerPoint. It's 8 slides, so it's not that long. What's up, Isaac? I'm going to mute you, and then I'll unmute everybody at the end. But stage 1 is $100. I tell everybody to start with $100. This is to get you comfortable with executing orders, buying and selling options without any hiccups, getting comfortable taking the right trades. Oftentimes people think trading is like an exam where you have 10 questions and you have to answer every single question, and it's either right or wrong. But that's far from the truth. You get to take the trades that you want. For example, today I was on for 2-3 hours, and I saw opportunity after opportunity after opportunity. I think I counted 9 or 10 opportunities that I passed up on. I could have nailed every single one of them. I took one of the trades, got out for 9% loss, but the 8 other opportunities after that, they all hit. I went back and did the math. They all hit like 20, 25%. And if it was on SPX, they all hit like 35+%. So with trading, you don't have to take every single trade. You don't always have to be in a trade. And more often than not, you're not in a trade. So a lot of traders want to always be in a trade. The opening bell happens and they want to get into a trade. But the easiest thing, and if you want to be profitable, wait a half hour before you even take a trade. That first 15 minutes is incredibly volatile. And I tend to size down significantly for that first 15. And then as the day goes on, then I can add on more sides because we have price action, we have key levels that have been created intraday, which are more important than pre-market levels. You know, those intraday levels, I use them in conjunction with pre-market levels and then hourly supply and demand levels. So let's say it's 10 a.m., 10:30 a.m. We have some strong price action usually on most days, like the majority of days have clear, strong price action with a high and a low and some supply and demand in between there that you can play with. So you don't always have to be in a trade. You don't have to always take the right trade. And going back to you have to be right or wrong. People think in trading is like a college exam, and it's either you're right or you're wrong. That's also not true. You know, I was wrong today, but it was a 9% loss on the trade. You know, I didn't lose the entire entry. I didn't risk the entire dollar amount that I put in, right? I risked 9%. And so if you get the question wrong, it's not like you're losing all of that money. A lot of people say, I don't want to lose all of my money. You know, it's kind of like if you buy a car and you find something wrong with it, you can always resell it. You're not going to just lose the entire value of the car, right? And I know most of you guys probably know this, but we're starting just from the basics, right? And so in stage 1A, this stage will require you to use a large percentage of your account. So I say if you're starting with $100, use up to 80% of your account. So don't use the entire thing, you know, just use 80% of it. So $80 per trade max. And so you're going to be trading tickers like AMD, SPY out of the money calls, tickers like Apple. They have some liquid names that are relatively cheap. And you just want to be able to learn how to take the right trades. And in this stage, well, in every stage, I want you to follow the law of 4 acceptable outcomes. And every single trade that I take, it has one of 4 outcomes. It's either going to be a small win, a big win, a break-even trade, or a small loss. And so a small loss for me is 25% or less. So if you're going to take a loss that's greater than 25%, you're starting to get to that medium-sized, large-sized loss. And personally, I don't like to take a 25% loss. For me, that's starting to get a little too big. And so usually when you take a trade, you know almost from the moment you take it, whether it's going to work out or not. Very, very rarely are we in a trade for 40 minutes and then it ends up working out. Usually if we're in a trade for 40 minutes, you know, it's super choppy and we're on the brink of getting out almost the entire time. I remember a trade that we had about 2-3 weeks ago. It took like 35-40 minutes for us to hit like 15-20%. And I was like, man, that was a stressful trade, but I'm glad that it worked out. I remember saying that exactly. So usually when you take a trade, you know almost immediately if it's going to work out or not, especially using my strategy where we're using supply and demand. We know almost immediately if it's going to work out or not. And most of the time, if I want to play a balance or a rejection off of the supply or demand area, the way it gets to that area is going to tell us everything. So if you see a big Marubozu candle, whether it's bullish or bearish, going into the area that you're trying to take for a reversal, it's kind of like taking a U-turn going 90 miles an hour. You're not going to want to do that, right? So you want to see a slowdown in price action to that area where you want to take a reversal, where you're trying to fade the market. So it's a risky trade just by its nature because you're betting on the stock to make a complete U-turn. And so you want it to get up there in like a rising wedge, you know, kind of choppy uptrend and then reverse right there. But if it gets in bull flag after bull flag and big Marubozu candles, or bear flag, if you're taking the opposite, if you're trying to play a balance, then you're not going to want to take that balance. So knowing the right trades to take and then entering with the right size. So that was stage number 1A, $100. Use up to 80% of your account, $80 per trade. And so that's going to be the only stage of your account where I'm telling you to use over half of your account, right? So stage 2 or stage 1B is a $500 account stage. So you can either grow your account from $100 to $500, which is doable, and you can probably do that in like 2 weeks. Hold on. What's up, Isam? I'm gonna mute you, Isam. All right, let me get another sip of water. Going from $100 to $500, you can probably do that in a month or less. That's a 400% gain. You're using a higher percentage of your account. You have to be very strategic with the trades that you take, but you could probably do that in about a month. I haven't traded a $100 account and I don't know how long it's been, but it's probably doable in about a month. So once you get to the $500 account stage, whether you get there by trading your way out of the $100 stage or just if you just start at $500, that's why it's stage 1B, because you can just start at $500. In this stage, you'll be taking the same types of trades. The main differences here are you'll scale down your entry size in terms of percent of overall account size, and you'll be learning how to let winners run. In the first stage, when you're taking $80 trades, you're going to be taking 1 contract, maybe 2 contracts if you're trading like Bank of America or AMD. And so you're not going to be able to let winner just run that often. In this stage, the $500 account stage, I say use up to 50% of your account. Sorry, I have a burp and it won't come out. We ate late dinner, so excuse me. So at this stage, you're using up to half of your account. I'm not saying every trade you're using half of your account. I'm saying you're taking up to half of your account. And the $250 limit is half of your account. So with $250, if you're trading AMD, you could probably get 4 contracts, 5 contracts, maybe even 6 contracts, depending on if you're going out of the money, depending on if it's a Monday or a Friday. Friday, the contract's a lot cheaper to go right at the money. And so you're using up to 50% of your account. So, and that's only in the $500 stage or the $100 stage. In any other stage, you're not going to be using half of your account. So if you're one of the people that has a $500 account, never use that entire $500. Use up to $250. And then the goal here is just to be able to take winning trades and be able to let your winners maximize your profit. So if you take a trade that hits 20% and you had, let's say you had 3 contracts, cut 2 of those contracts at 20%, and then set the other one for a break-even stop loss. Or you can do like a -5%, -10% stop loss. So even if you do get stopped out, you still are green on the trade. Or you can have a -20% stop loss on the 3rd contract. So if it does get stopped out, it takes away one of the winning contracts. And then, so it's a wash. And so it's as if you only traded 1 contract with a 20% gain. So there are different ways to do it. And everybody's trading psychology is different, but you got to find what works for you and then just maximize that. And so for me personally, the way I trade and the size of positions that I take, I start taking profits at 10%, 20%. And then from there, I set my stop loss to break even and I try to let the winners run. Then it hits 30 to 40%, depending on what it looks like in the chart and depending where it is in terms of my price target, I'll start trimming more. And oftentimes by the time it hits 50%, I'll have a few runners left and that's it. And so let me make sure I didn't miss anything. This stage helps you build your trading psyche. You learn how to make money and you learn how to lose it. You begin learning price action and various strategies that I'll be going over in future sections. So this slide is part of the course. I'm not actually going to be going over future sections. I was just reading that. But one thing I want to focus on is you learn how to lose money. So that trade that we took today, that was a 9% loss. If I was trading 5 years ago, that 9% loss would probably been a 30% loss, you know, and that would have been triple the size loss. And so, and I also knew to go in a half a position size. I told you guys, hey guys, I usually go in 5% of my account per trade. I'm only going half of that. I'm going 2.5% of my account on this trade, and I'm gonna have a rather tight stop loss. So really, if this was a normal size trade, it would have been a 4.5% loss. It would have been a very negligible dollar amount. But I knew it was a higher risk trade, and so that's why I navigated it that way. But learning how to take losses is, I think, more important than learning how to play. Learning how to take winning trades is rather straightforward. Learning how to make money is rather straightforward. Keeping that money is the hardest part. How many of you guys have had the boom or bust cycle? You know, it's a pretty common thing amongst traders. And if you've read Trading in the Zone, which is my favorite trading book, he talks about the boom and bust cycle. A trader, a beginner, intermediate trader will have just a nice little steady uptrend, and then bam, they lose everything that they made over the last month or two, right? And then they have that same exact uptrend, another drop at the same point. And so if you look at their chart, it just looks like this, and a drop right here. Another gain, and then a drop right back to the same area. And the bust cycle always happens at the same dollar amount. Let's say they started with $1,000, they get it up to $5,000, they lose it all, they're back to 1,500, back down to 1,000, back down to 2,000. They get it back up to $5,000, and then they keep just repeating the cycle. And that's because they don't know how to lose. Learning how to take the loss graciously and accepting you're wrong and cutting the trade as soon as you're wrong is the right way to do it. And personally, I took a 20% loss on Microsoft I think it was last week. And when I went and I journaled it, I hesitated by like 2 minutes. And I should have cut it for, it was like an 8 to 11% loss right around there. But the moment I knew I was wrong, I held it for like 1 or 2 more 1-minute candles that went against us. And I could have gotten out of that trade for pretty much like, it was between 5 and 10, 5 and 12%, something like that. I'd have to go back to look at my notes. But even me, somebody who's been trading for quite a while made that mistake. And I took a 20% loss when I should have only taken a 10% loss. And for me, like I bounced back from it. We ended green that day. We hit a nice winner after that. But I could have kept more money in my account if I would have just cut that loss a little sooner. So learning how to take a loss is going to be very, very important. I would say more important than learning how to win. They're equally important, actually. All right, step 2, stage 2 is the $1,000 account size. So in this stage with $1,000, you've gained proof of concept from taking trades in stage 1A or 1B. You've taken dozens of trades or even hundreds at this point, depending on how long it takes you to get out of stage 1A, stage 1B into stage 2. And you've seen consistent growth. There's no way you get to stage 2 without being a successful trader, a moderately successful trader. You can't go from $500 to $1,000 using strong risk management principles without being a good trader, like a decently good trader, unless you go a little bit, but that's not being a decently good trader. That's being a degenerate, right? So going from 500 to 1,000, huge accomplishment. And if you've done that, pat yourself on the back, because that's impressive. You doubled your account. That's incredible. And so now in this stage, instead of using 50% of your account, you're going to use 25% of your account. So now a smaller percentage of your account, but it's still the same account, the same position size. So now your trades are $250 still, because in the $500 account stage, I said use up to half of your account, which is $250. In this stage, you use up to a quarter of your account, which is $250. And now here, you're using the same dollar amount as the previous stage, but the key here is improving your ability to let winners run. If you can improve that on a medium scale in this stage, then it'll help you out in the longer run when you're using a higher dollar amount and buying a lot more contracts. And so in this stage with the $1,000 account, you're still using $250. And let's say you bought 6 contracts. Now your goal is, let's say you cut half of them at 20%. Your goal is to those other 3 contracts, you're trying to squeeze more juice out of that orange than you were in the previous stage. In the previous stage, in the previous stage, since you're using half of your account, you're going to be seeing the dollar sign and you're going to be like, oh shit, I'm up $100 on this $500 account. Oh, I'm going to sell it all. But now, if you're up $100 on a $1,000 account, that's still really good. That's 10% of your account, but you're not going to get as excited about it. Now you're trying to focus and just focus on the chart and see what the candles are telling you, see what the price action is telling you, and then make the right decision that way. And so in this stage, you'll be analyzing the charts, you'll be reading price action, you'll be taking a look at level 2 and time and sales. You'll be just more laser focused on trading than you were in the previous stage, because it's going to take more focus to squeeze more juice out of the orange. And so letting your winners run as much as possible will be the key to getting you to the next stage. I would say will be one of the keys to getting you into the next stage. Once you're in profits, you always want to keep one runner with profit targets of 100% or a break-even stop loss. So that's what I like to do. Once it hits like 50%, if I'm in a trade that hits 50%, which doesn't happen all the time. It's not like every single day I'm in a trade that hits 50%, but you know, like 3 out of the 5 days of the week, we had a trade that hits 50%. And I'll like to leave a runner that hopefully hits 100%, and then I can cut that at 100% in this $1,000 account stage. All right, that's stage 2. And then stage 3 is the $5,000 to $10,000 account stage. And currently, I have my small account. I started with $5,000. I did it like 20 days ago. It's almost at 7K now, and I'm being very strict with this account. I trade it every single day, and because I want to see realistically, because it's been a while since I've been trading this account size, and so I trade a little $5,000 account on the side right now to see how quickly I can actually get it to 25K. And I'm thinking I could probably do it in about 6 months or less, but we'll find out. Once you hit the $5,000 to $10,000 account stage, you've mastered order execution. You're getting better at cutting losses quickly. You're sharpening your ability to let winners run. And in this stage, you're reducing your entry size from 25% in the previous stage to 15%. So in this stage, you're using up to $1,500 if you're trading a $10,000 account, or up to $750 if you're trading a $5,000 account. And so personally, with the small account that I'm experimenting with right now, I'm actually just using about 5% because I want to like show you guys like, hey, I did it using only 5% and I got it to 25K in 3 months, 6 months, whatever the time frame is. Hold on, somebody's in the chat. Is that the account you're making SPX trades in? I have taken SPX trades in it, but I like to trade SPY in that account. But I've done both. All right. So in this stage, let's say you start with $5,000. You're using $750. Once you get to $7,000, you're still using 15% of it. And so let's say $7,000 times 0.15, that's $1,050. And then once you get to $10,000, that's $1,500 max. I'm not saying every trade should be that amount because, you know, trading the open is so much different than trading intraday. And I guess trading the open is intraday, but trading the opening bell is different than trading an hour into the day. So if you're trading that open, I would size down significantly to less than 5% of your account. So if you're trading $5,000, I would trade with like 2.5% or 5% of it. So like $100, $250. You'll notice the motion's kicking in a little bit more because your max total dollar amount in this stage has grown substantially. You went from taking $250 trades to now $750 trades. And so you're going to see a higher drawdown, higher profit. And so the goal here is to manage your emotions as well as you can. And they're going to really kick into high gear here. And if you're somebody who is struggling with the emotional management aspect of trading, I would just go back to stage 2 or stage 1B or stage 1A. You know, you got to start somewhere. And so if you're somebody who's always started with $5,000 or $10,000 and you just keep losing money, having to put money into your account, and you keep losing money, you know, something's got to change. So go back, start with $500 and start trading the right way. And, you know, just be religious about it, you know, have rules, follow these rules and have tight stops, let your winners run. And I mean, if the rules are there, you know, whether you follow them is up to you. And only you will know. Nobody's going to know whether you follow the rule or not. So it's just, you know, it's a journey between you and yourself. You know, you got to pretty much buckle down and tell yourself, you have to respect yourself enough to follow those rules. And if you keep breaking your rules and disrespecting yourself, then you're going to just go in a circle constantly. It's going to be frustrating, and eventually you'll give up and you're going to think that it's impossible to become profitable trading. But you only think that because you're, what's the word? You are, what's the word? You are, the feelings that you have about trading at that point are because of your own actions, you know? So I wouldn't keep making that mistake and keep going in that same mistake cycle, the same loop of repeating the same mistakes, you know? So the goal in this stage is not letting your emotions take over, learn to manage these emotions as they get stronger, and continue following the rule of 4 acceptable outcomes. So every trade should result in a small win, a big win, a small loss, or break even. Never take a big loss. No YOLO trading. Protecting your capital is always going to be, it always should be at the forefront of your mind every single day. So every single time you're about to enter a trade, you say, hey, is this high risk? Do I have the edge on my side? Am I taking a trade with 2 points of confluence? You know, like yesterday, I said, I want SPY to bounce at the VWAP and a bull flag. I said that, right? So the bull flag and then the VWAP bounce, 2 points of confluence, and did just that. And that trade ended up hitting 82% in like 24 minutes, right? And so, I mean, within like 10, 12 minutes, we're already taking profits of 50%. So when you're entering a trade, you should always have 2 points of confluence. I'll go over that here after I go through the stages of account growth. But this is the $5,000 to $10,000 stage, 15% max per entry. And then the $10,000 to $50,000 stage is a very wide range, right? But going from $10,000 to $50,000, this is like the longest stage. This stage takes the absolute longest, and it's a fucking grind. You know, you'll go 10K to 12K, back to 11K, back to 10K, back to 13K. It's just like 3 steps forward, 1 step back, 4 steps forward, 2 steps back, 3 steps forward, 3 steps back. You know, it's just like, but it's a steady uptrend, a small drawdown, steady uptrend, small drawdown. Occasionally you'll make a mistake, not a bigger drawdown, but the goal is, you know, always minimize those losses. So if you made it to the stage, you have shown great emotional discipline. This is the stage where you finally begin to see the fruits of your labor on a larger scale. Financial freedom is right around the corner if you can just get through this stage. You will now use up to 10% of your account. So 10K account, max $1,000 per position. 20K account, 2K. 30K account size, 3K per position, max. I'm not saying every position should be that amount, but I'm just saying the max you should risk, if I were you, is 10%. So, well, I wouldn't say max risk, because risk is what you're willing to lose. Max entry size is 10%, and the risk is 10 to 20% of that, right? So $100 to $250 loss per trade should be about the max that you're willing to risk in this stage. This stage will allow you to take many more trades, and it'll allow you to let winners run longer, since you'll be holding more contracts. So in the last stage, if you had a $5,000 account, I said max 15%, so that's a $750 position. And this, with a 10K account, you're taking a $1,000 position. So that's an additional $250, an additional 6 contracts if you're trading AMD, and an additional couple of contracts if you're trading SPY. So in this stage, you'll be just able to let winners run longer, and just by default, it's going to be a faster profit gain. Like you guys saw, what's his name? He posts his profits and he shows his account, and it's like 40K. And you guys saw he was at 20K, 25K like a month ago. And so going from, once you get to 25K, going to 30K is, you know, it's a week away. It's a good week away. Going to 35K is another good week away. Going from 25K to 50K is just like one solid month away. If you just had crushed it that month, you know, it's possible, especially if you're trading, taking the right trade and letting your winners run. But you know, if you're cutting all trades at 20% at that point, then you know, the gains will be a little slower. But at that stage, letting winners run and taking half at 20%, another half at 40%, you know, you just, that's double the money right there. You know, 40% is double 20%. So In this stage, you recognize trading patterns much more quickly, and now you're fishing for your own trades. And like Jacob did, I said something about a head and shoulders pattern, and he was like, "Yep, I knew that SPY. As soon as I saw that head and shoulders confirm, I got into puts, and he wrote them all the way down on that big red day that we had." So in this stage, hold on one second. Yeah, that's what I want to go over. You're recognizing trading patterns quickly. For me, I think the most important part of trading, other than trading psychology, is being able to recognize patterns quickly. Pattern recognition, for me, in my opinion, is probably one of the best traits you can develop. And that just goes to the way you can develop that is by spending a lot of time watching the price action and watching the 1 and 5 minute charts for like an hour a day. And I mean, that's how I'm able to see things relatively quickly. I wish I could see them like instantly, as soon as a candle prints. I want to be like a computer to where it's like, oh, damn, stuff has changed. I want to be, that's my goal, just to see it like a computer. I feel like I see things very well, but there's always room for growth. But in this stage, you're going to be, I don't want to say money hungry, but you're going to be so excited at the gains that you're seeing that you are going to want to spend more time on the screens, take more trades, and by default, you're going to be getting more experience. The person that goes to the gym for 2 hours a day is going to make better gains than somebody who's going for 30 minutes a day, right? Especially if they're recovering and doing everything, eating right, drinking a lot of water. So in this stage, this is the longest stage. I mean, it's a 40K stage from 10K to 50K, but it's also one of the stages where you can see accelerated growth if you do the right things. And then this stage is also a really difficult stage, but if you make it through to this stage, you made it through one of the longest stages, and ultimately the stage where most traders quit. Most traders, once they get to that 10 to 50K, they quit there because a lot of people start with that dollar amount. And believe it or not, a lot of traders start with over $10,000, but less than 50, and they just start taking the wrong kind of trades, entering too large of positions, not knowing when to cut the trade. They're down 50% now on a $10,000 position when they should have only been taking a $1,000 position. And then, they end up quitting because there's some smart person, they might be a doctor or a lawyer, some big shot in a different sector of the economy. And so because they're intelligent and they've worked hard and they're successful in that part of their life, they think they're going to come into trading and they're going to have the same success because they're smart. But trading doesn't matter. You don't have to be smart. You definitely don't have to be smart to be a good trader. You have to be able to recognize patterns quickly and be able to follow rules and, cut losses relatively quickly. You have to make decisions quickly rather than being intelligent. If you're smart, if you're so smart that you think you're smart, you might think that you know more than the market knows. And that's the easiest way to get humbled really fucking quickly. So, yeah, being smart is great, but it could be to your detriment if you are like arrogantly smart. Does that make sense? If you're cocky about it, so somebody who's succeeded very well in their life, in their professional career, might actually come in at a disadvantage than someone who, just got out of prison. Somebody who just got out of prison knows how to follow the rules. They go to bed at the same time every night. They probably work out every single day. They eat the same thing. They have a strong, regimented lifestyle. Maybe they were rehabilitated for some egregious crime, right? They come out of prison and they know exactly how to act. They know how to follow rules. They don't want to go back to prison. And so if you equate that to trading, they don't want to blow their account. They know how to follow strict risk management principles. They know in prison not to fuck with that guy that stabbed this guy. They know how to act, And so I'm going to take a little detour. I actually met a guy. I went to the local landfill. I was throwing some stuff away from my house when we were moving. And he was a really friendly guy. I was unloading some stuff, and he came out of nowhere and started. He was like, "Hey, do you need help unloading?" friendly guy, smile. And I was like, yeah, sure, thanks, I appreciate it. And so he helped me unload some stuff into the landfill, and he was walking away. And as he was walking away, I saw on the back of his shirt it said inmate. And I was just like, oh shit, this guy was probably working here on work release. Why would like that's probably a job that most people wouldn't want, working in a landfill, something that is not really a desirable job. Anyways, I got to talking. I went back. I drove away about 100 yards. I drove back. I reversed, and I was like, "Hey, man." So he walked up, and I got out of the car, and I was like, "Hey, I saw the back of your shirt. Are you currently incarcerated?" And long story short, we were talking, and he got caught up in like some drugs, and he's pretty much. He seemed to me from the 15-minute conversation that we had that he's ready to be out. He's done all the right things to be on work release. He gets out of prison in about a year. I gave him my contact information, and because I thought, I was like, you know what, like this is somebody who definitely seemed. I believe in second shots, second opportunities for everyone. And this guy seems like he wants to turn his life around, and I want to see. I want to see if someone like that who fucked up in their life could like turn it around and like leave prison and become successful trading. So we might have somebody come into our group sometime next summer who came fresh out of prison, but he's a friendly guy. From my 15-minute conversation with him, I give everybody the benefit of the doubt. Who knows? Maybe he comes in and starts trying to sell y'all drugs. Just kidding. But going back to that example, somebody who somebody who's like overly cocky, trading will humble them really quickly, and then they're going to have to learn the lessons the right way, or they're going to give up, and they're going to be part of that 90% of people that gives up, especially in this state. And the reason I brought that example up is because somebody who's successful in their life is going to have $10,000 to $50,000 to deploy to, hey, let me start trading, and that's why I was saying the $10,000 to $50,000 stage is the stage that most people quit in, because a lot of people with money come into trading thinking it would be easy money, and then they're the ones that quit. They're not people that start with almost nothing. Most of the people that make it trading are either professionals in finance or people that started out with nothing and had to learn the hard way after losing and losing and losing. Take your favorite guru on Instagram. Guarantee all of them they started with nothing, and it was a constant struggle. For me, like 2 to 3 years to become like successful. Like it wasn't easy, but here I am. All right. And I also started with nothing, I was saving my money, like everybody. So I've given you guys the fact that like my dad worked on Wall Street, but I don't include the fact that I had to quit high school sports because my dad wouldn't pay for my what's it called? Not the initiation fee, but there's a fee every year. It's like $300 or so. And in high school, like at one point he was like, you need to get a job. I'm not paying that. And he was serious, So I ended up quitting high school sports, and I got a job, and kind of sucked, because I was relatively athletic. I wasn't going to go D1 in anything, but I also was given a 18-year-old car when I got my first car, and it didn't run. I had to take it to the shop and do a bunch of work for it. So although my dad did work on Wall Street and was very successful and taught me a lot, he gave me nothing. So, which is actually a benefit. I wasn't going to go pro in sports anyway. So, all right. So in this stage, you will learn how to scale into positions. This $50,000. Okay, wait, let me rewind. You'll begin to see income generating gains. Okay, so in the $50,000 account stage, you're going to be using max 5% of your account. So if you're using 5% of your 50K account, that's $2,500 per position. If you're with a $100,000 account, that's $5,000 per position. And so if you're taking, let's say, a $2,500 position and that hits, let's just say 30%, that's $750. Multiply that by 252 trading days, that's 190K. So let's just say, let's reduce that. A $2,500 position, and you just hit, let's say every trade you take hits 10%, nothing more. That's $250 a day times 252 bucks. That's 63 grand a year. That's the average median household income. So if you just take 10% and nothing else, no winners running, nothing else, you'd be making 63K with this 50K account. So in this stage, there are plenty of opportunities. And one thing you'll learn how to do is scale into positions. And so scaling into a position means, let's say we want a bounce right here. So the stock comes down, starts, fluctuating. You could probably buy 2 or 3 contracts right here. And as it gets closer, you're nowhere near your full position size because your position is $2,500. The contracts are $150. You could buy 4 of them and your entry is only at $600 right now. You still have $1,900 to go to be in a full position. So as it gets closer, you can continue scaling in. And as it begins bouncing, you get more flexibility to scale in and scale out a position. There's an art to scaling in and scaling out. And it takes practice, but this account size, you will get that flexibility. And so now in this stage, you won't ever be like, you guys sometimes hear me be like, dang, I was waiting for it to get 30 cents away from the rejection. The reason I'm waiting is because I know I got plenty of people trading. I could scale in, but if I'm scaling into a position and somebody else has a $3,000 account, they can't afford to scale in unless they're going to use that entire $3,000. What if the trade doesn't work out? Not all the trades we take work out. So if they scale in and then let's say it gets to that supply area or rejection or bounce area and it just goes right through it, I would completely cut my trade before scaling in. But if they're already committed to it, they might be like, fuck it, I need to scale in now to average down. And so that's why personally, I always like to wait for the exact rejection area for me to get into the position. And if I scale in, I will let you guys know, hey, I'm scaling in. If you have a $1,000 account, $5,000 account, I've said this before, I would wait to get in. I say things like that just for a reason. I'm not just saying it because I don't want you in the trade with me or anything like that. I don't know what other reason I would have, but the only reason is because I'm trying to protect you guys from taking a trade that might not work out, you entering a little too early, and then that just makes it a little more emotionally demanding for you to be in a position that, I know it might go down 10%, but I personally don't care if it goes down 10% because I'm just gonna buy more. And by the time I'm fully in, I might just be down 2%, So occasionally bounces and rejections happen very quickly, but in this stage, you'll be able to use some flexibility with entries and exits. All right, and then the next stage is the stage where serious income can be generated. So in this stage, you're using, in the $100,000 stage, you're using 5% of your account, no more than 5K per position, ever. There's absolutely no need to be taking a trade larger than $5K if your account is 100K. No need. I guess you could, but personally, with a 5K account, that 5K hits 20%, that's $1,000. You do that every day, that's $250,000 a year. You do half of that with that 5K. Let's just say every trade you take only hits 10%, which we know if we average all of our trades together, they almost all hit 10%. We win roughly like 85% of our trades, almost all of them hit 10%. So let's just say you only take a 10% gain. That's $500 per day. That's 126K per year. So let me put this hat on this way. So this is the stage where you're actually generating income and you're going to be thinking, should I quit my job yet? Can I quit my job? And the answer to that is you'll know when you should quit your job. But I always recommend you just keep it. Free money. I wouldn't say free money. You got to work for it. But once your job is literally preventing you from making money in the market and it keeps getting in the way, fuck, my job is paying me 50K and I just made 150K trading this year. That day I could have made, let's say you say, I could have made like $4,000 on that trade right there, but my fucking boss had me be in a meeting and I missed that $4,000 trade. So that 1 hour meeting cost me $4,000. Or let's say, let's be a little more conservative. Let's say it was a 30% trade. So 0.3, $1,500. So you missed out on $1,500 and you're making 50K a year. Well, hey, dude, if that happens like 10 times, that's $15,000 that like 15 random meetings that you had that you missed out on, like $15,000 total, and you're making, let's say, 50K a year. Well, there's a decision to be made there. I would still say, like, take a look at the benefits. If you have amazing benefits and your wife is about to get pregnant and the health insurance is crazy good, and let's say she had some complications with her last pregnancy, or from any ladies on here, I didn't take a look, but let's say you're pregnant and you have some complications with your last pregnancy and your kids went to the NICU, and the NICU bill can be up to $100,000. Both my kids went to the NICU. Those bills were, one of them was like $150,000, and the other one was like $80,000. Obviously we'd have to pay all that, but it's like, you then consider, okay, I'm staying in my job because of healthcare benefits. I'll stay with my job until we stop having kids, or until I am fully vested in my 401k, or whatever the case may be. Like, if your job says you have to stay here for 5 years to get this 401k and you have 20K in there, and if you leave, you're going to lose half of it. Well, it might make sense to stay for an additional, if you have 6 months left, a year left, there are decisions to be made. Anyways, let me read what this says. At this point, you've contemplated quitting your job, or you may have already quit your job. Again, I will always be a proponent of keeping your job for as long as you can. No shame in working. There's literally no shame in working. Before I quit my job, I was making about $69,920. I remember, because I was $80 shy of 70K. But let's just call it even 70,000. I was making 70,000, and but before that, before I got a couple raises, I was making it was probably like 45,000, and my wife was pregnant with our first kid, and I was like, you know what, like, I want her to be able to take her a long maternity leave, and this was like almost 6 years ago. I want her to take, it was over 6 years ago. I want her to take a really long maternity leave. And like, at that point, we were just getting out of debt. I wasn't making a lot of money. I wasn't making a ton of money trading. And so I got a job at Home Depot. So I was working a 40-hour job with the government. And full disclosure, I used to work for the FBI. I haven't shared this with a lot of people, but I worked for the FBI for 5 years. And so I wasn't making great money at that point. But then I got the second job at Home Depot. So I was working 30 hours at Home Depot, 40 hours with FBI. So I was working 70 hours a week, and still like trying to get better in trading. I'd make some money, lose a little bit, make it, lose it. I was still navigating the waters, right? And so I definitely am a huge proponent of working a job, working 2 jobs, working as much as possible, as long as it's not getting in the way of your family life. And I mean, it was getting in the way of my family life, but I was doing it for my family. So definitely no shame in working. And I would keep working as long as possible. The hustler mentality, I love that. I love it. If I was single, I would potentially get a job. If I was single and had no kids, maybe I would get a sales job. If I could make like really good money with high dollar ticket items in sales, to like stay busy, because I'm not the type that's like, oh, I'm done trading, let me go watch some Netflix or some shit like that. I don't really do that. I watch Netflix like maybe for like 10 minutes before I go to bed. But I like to work out. I like to be proactive, So if you're doing shit that's proactive, working is one of them. So anyways, so in this stage, like I said, 5% of your account, no more than that. And once you get to this stage, this is the goal of every single trader, getting to that $100,000 stage. Once you get there, trading becomes a lot easier. You could even just use 1% of your account and have like a higher risk tolerance, and if that, let's say you use 1%, that's $1,000 per trade, and you hit that for 25% every day. That's $250. That's 100. What's that? What is that? 70K a year. 250 times 252. That's 63K a year. This stage is where you have you've pretty much reached financial freedom, and the world is your oyster, and your growth acceleration is dependent on you. I say the 5% of your account, but at that stage, once you get there, you're gonna know what's best for you. I say 5% because that's what I like to do, but you could probably, let's say you hit 15% of your account. So you're entering 15K per position. That 15K hits 20%. You know, what's that? That would be $3,000. You just make $3,000 for hitting a 20% trade, something we do almost every single day. And you do $3,000 for 250 trading days a year. That's $750,000. So it's up to you, but personally, I like moderate, steady gains, less stress for me. My risk appetite is a little lower than a lot of people's. All right, that was the stages of account growth. Now, the other part that I want to talk about is taking the right trades. So hopefully that cleared a lot of stuff up in terms of people blowing their accounts. Blowing accounts should not happen in this group. You know, there are groups that are like, hey guys, let's ape into this trade. I love that expression. Let's just ape into this trade. We don't do that. That's not acceptable. That's not okay. So let's never do that. All right. Follow every single step that I've given you guys here, and you'll be just fine. Especially if you know how to cut trades as soon as you're wrong. Oh, 1 second. I just want to make sure. There's a CNBC alert. But yeah, review this, and I'll post this in the group once we're done. But now let's talk about taking the right trades. You're all going to see my alien. That's just the default background. Now, let's go here. All right, so taking the right trades. How do I know when to take the right trade? How do I know when to get in? How do I know when to exit? It all comes down to supply and demand. And so, if we are looking to take a trade tomorrow, I take a look at the weekly chart first. I know it's messy. I don't want to delete the line. But we know, obviously, we're in a downtrend. We're in a downtrend, and we know that this area right here was the area where we were probably going to see a big bounce. We got just above it and began bouncing. All right, let's go to the daily chart now. All right, on the daily chart, we see all the historical price action, yada, yada, yada. Let's just fast forward now the 4-hour chart. This is where the magic happens. The 4-hour chart. If you're not using the 4-hour chart, I highly recommend using it. You know, the 4-hour chart it will set you free. You start with the 4-hour chart, and I start looking at, it's something I call the V's and the A's. So a V and an A. But when I do the A, we're gonna remove the middle part of the A, right? So just the peaks and the troughs. So the trough is the low, the crest is the top. So the highs and the lows. So I just try to find highs and lows. This is how I like to do it. I do it in my head, but just so you can visualize it, this is what I look for. I look for things like this. Boom, boom. Just any area where we have little V's, right? Little V's. Bunch of V's everywhere. V, V. And then the A's, those are the tops. The top, top, the top, the top, right? This is a good exercise. So you try to find all of them. I'm not going to go over all of them, but they're everywhere. Every stock chart has them. So once we do that, then we start drawing our supply and demand area. And the supply and demand area is an area where the V's, and the A's kiss each other. That's a supply and demand area. So the V right here kisses the A. Mwah. All right, where are they kissing? Right here. Look right here. There's an A kissing a B, kissing an A, kissing an A, kissing an A. It's like I'm saying kissing an ass. But I just look for that. There's a V right here, kissing another V, kissing another V. So an area where you're seeing a lot of rejections and a lot of wow. Those hand gestures were not planned, but you're seeing a lot of rejections and then bounces, right? Y'all don't post this on Instagram. But yeah, you're seeing a lot of rejections, a lot of bounces at the same area. And that's what I'm looking for. So oftentimes, where we see hard bounces is an area we're going to see a hard rejection once you break down. So look at this area. We rejected it. Let's extend it to the left. Okay. So we had a little bounce here. We gapped down here. We rejected a little above it here. Exactly at it there. Exactly at it there. So these two right here, this circle here and this circle here, that's what really put it on my radar. Then with the third test, obviously we're not going to keep rejecting forever. At some point you break out. Then we come back and bounce at it once, twice, 3 times, 4 times. Next time we flush. The 5th time we flushed, because you can't bounce at it forever. The next time after we flushed, we rejected it once, rejected it twice. We'll probably get up to it and reject one more time, and then maybe the 4th or 5th we'll break out. Maybe we'll even break out on the 3rd. And then this area right here, I'm looking at it for a potential rejection because it was a bounce all right here. I was looking for it as a rejection here, but we rejected it a little early, which is something I like to point out. If I'm expecting a rejection in this green area right here, I'm going to draw an arrow. If I'm expecting a rejection right here, and we reject a little below it, the next time we test that area, I'm not feeling as confident about it. It's like, let me see if I can use an analogy. It's like somebody told you that they were going to do something and they didn't do it. Next time you ask them to do that thing, like, hey man, can you walk my dog? Yeah, I got you. They didn't walk your dog. And then you're like, hey man, you think you can walk my dog this time? And they're like, yeah, I got you. You're going to be like, wait a second. They said they would do it last time and they did it. So right here, we're anticipating it getting all the way up here, then rejecting, but it did it ahead of time. I feel like that wasn't a great analogy, but you guys get the point. And so I just want to point that out. So it rejected it here. So the next time we got there, it didn't. And so, yeah, I didn't feel strong about that rejection. Anyways, this is still a key level for me because if we zoom in, once we broke below it, we came back and rejected it. And then we rejected it again today, right at the open. We got right up there and rejected it. But now we're right back in it. We'll probably break out. We could break out to the same area, the same price point right here, and reject tomorrow, or maybe we just go higher. But I'm anticipating a move up to this supply area and then rejecting because it is a rising wedge. So we have a supply area and a rising wedge. I think we probably reject at least a little bit for a potential 10, 20, 30% gain. But so when I do my analysis, my prep for the day, I always look at the 4-hour chart first. So, for example, on this day, you have the head, the left shoulder. We can anticipate maybe a right shoulder forming. So if you anticipated that, then we flushed, right? And I believe that was on Monday. That was on Friday. Friday was a good day. Yeah, Friday was a good day. So pretty sure. But so I try to see the structure of the overall market on the 4-hour chart. And so I try to see all of the lines. Are we closer to a demand? What have we done at that demand zone? Are we close to a supply? What have we done recently there? Have we already rejected it a couple times? Okay, now I can probably expect maybe a breakout. So let me wait for that breakout. So knowing how to take the right trades is knowing what has happened. If we've already bounced somewhere like 10 times, that bounce becomes weaker and weaker and weaker. For example, let's look at the AMD. Where is no, it was Meta, sorry. Meta is the one I wanted to do. So Meta right here kept bouncing, right? And it was just creating just a descending triangle. I mean, we murdered the fuck out of this trade. Excuse my language. For anybody who's got kids around, I'm so sorry. But resistance, 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 resistance. So 5 rejections here. Support was once, twice, 3, 4, 5, 6, It finally broke down, right? And I believe we took the rejection there. So eventually, it's like a basketball. I get a basketball and you drop it. First bounce is the highest, second bounce goes boom, 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 boom. And eventually, it just makes the same exact pattern as this chart does. Each bounce is lower and eventually it stops bouncing. And in this case, in the charts case, once it stops bouncing, what is it going to do? Break below. It's not just going to stay flat sideways. So we took the downside. So the fact that we knew, all right, guys, meta keeps bouncing here. Eventually, we're going to break down. I have my eye on it. I have my eye on it. On another one that still haunts me to this day, one of the biggest drops I've ever seen on Tesla was this right here. Was it this drop? Yes, it was. So I was watching this drop for a while. I was like, all right, Tesla keeps bouncing here. It made, I believe, like an $80 move. Let's see. That is a $34 move, but that's pre-split. It did that. Was that a 3-1 split, 4-1 split? I think it was another 3-1 split. So 34 times 3. What's that? 34 times 3. $102 move. It made a $102 move, and I missed out on it. And I was watching this thing for days. I saw it bounce once, twice, 3 times, 4 times, 5 times. And I missed this trade. And it still haunts me. I will always bring it up. And once we broke down and retested that area and a bear flag, somebody could have been like, whoa, look at what Tesla did. I'm swinging calls. But we know the supply area is here. Why would you swing calls? It's trading in a bear flag. Why would you swing calls into this? That's the most risky thing you can do on a Tesla trade. Swinging calls based on one bullish candle on the 4-hour chart. So getting that emotional management down is very important. It's not just managing your emotions when you're in a trade. It's managing your emotions when you're not in a trade, because the market knows how to get you to take that trade. It knows how to get you to do that. And so you have to be mentally strong enough to, first, I'm not going to be impulsive. I'm not going to just get into the trade because I feel like it. I got to go look at the 4-hour chart. I got to go see, is there something that tells me not to take the trade? And in this scenario, you have a bear flag telling you not to take it. You have this supply area telling you not to take it. That's 2 things telling you not to take it. That's actually 2 things telling you to take a downside trade if you want to swing it. Personally, I would just wait for the next day, either for the breakdown or the rejection here. But knowing what to do is just as important as doing it. And so knowing when to not take a trade is also pretty important. So for example, SPY. Let's take a look at the SPY. Let's take a look at the 4-hour chart. So SPY's average trading range is about $9. So it's about that big. So when SPY trades, hold on. Let's just say right there. So I'm gonna activate this. So this height is the height that SPY usually makes. So if we're trading in a day and SPY is trading less than this, like for example right here. Let me just move it. On this day, the ATR on SPY was 5. So if SPY is an ATR, if SPY is an ATR of 5 and it's like almost noon, there's no trade to take, so you just walk away. If by noon you haven't taken a trade and the SPY ATR is at like 3, 4, or 5, ATR stands for average true range. And that's just the range from the high to the low on average every single day. And it changes every day because each new day gives you new data. So it might increase by 10 cents, decrease by 10 cents. Currently, I'm pretty sure it's at 8.9 the last time I looked, but let's take a look. I bet it's at like 9 now because we had a big day a couple days ago. SPY, it's at 9.45 now. So SPY is almost at 10 ATR. So that's good. You get more volatility. That's what we want as traders. But anytime you get, choppy price action, for example, let's move this thing right here. We'll take it right here. On this day, look at SPY's range right here. It's like half the size of that. So on those days, you wait because if SPY's consolidating in a tight area, it's like you're getting a spring let's say SPY's HER is like this. You know, this is the spring right here in my fingers. And I crunch it like this. How long am I going to be able to hold this string here? Or this spring right here? Eventually, I'm going to be like, damn, I'm tired. I'm going to let go of it. And that thing's going to go, pew, just going to fly to either direction. And every time we trade choppy for a while, like right here, we traded choppy for 8.5 days. It says 13 days, but that includes weekends. Right here, we traded choppy. And then what happened? We got a monstrous move to the downside. It dropped 11% in a week. In a week. It dropped 11% in a week. That's fucking insane. And another one. You know, traded choppy right in here. And then it gained 4% in 4 days. That's also insane. So yeah, anytime we get some tight price action, you should get excited. Be like, damn, I'm really excited that big move's about to happen. Let me just be patient. Let me catch that move. You know, rather than being like, you know what? I'm gonna guess and I'm gonna try to catch the move. That's not we react. We don't predict. We don't predict anything. We just react to it. Because if I'm trying to predict something, because I'll say, hey, this could happen. The watch list is me saying what could happen, not what is happening. Once something, like for example, we had a bounce on, did I have a bounce on Amazon this morning? It got to that bounce level and I said, I'm absolutely not taking this. Hold on, let's see. What was the level? We'll just go over it. Yeah, Amazon 116 bounce. I believe it bounced right above it, but let's see. All right, Amazon, oh, it did bounce there. It did bounce there right at 116. It got up to 116.9. But the way it got, that's what it was. The way it got there, two big, strong sellers wicks, sellers candles with increased volume on this candle right here, made me not want to take. But hey, the algos work. I mean, it worked. I didn't like the way it got there in this bear flag. Oh, I also didn't like the fact that it already bounced at 116.15, this area right here. It already made a bounce of $1.40 right there. That was another reason. Well, it's nice that I was right, but you know, like I was saying earlier in this webinar, it's not like an exam where you have to answer every question. You don't have to take every trade, you know. I sure as hell don't take every trade that I think of. I let you guys know about almost every trade that I think of, but I don't always take them. So now I want to open this up to everyone. So we went over the account stages and how to trade in the account, the various accounts, and then knowing which trades to take. So this will be posted in the Signals channel probably an hour after we're done. But if you have any questions, we have one raised hand. Let me see how I know. Okay, Sion, I'm gonna unmute you.
Hey Mark, thanks for the presentation. I had a quick question about in one of the slides you're talking about ability to let the winners run. I'm kind of having a very difficult time with that. Like, how do you get into that mindset? How do you do that correctly? Because most of the cases I am having a kind of a mental issue where I enter a trade, I see a position down by a few percentages, like 4, 5, 6%, but 8%, and then the moment it comes back up to like 6, 7 plus 6, 7, 10%, and I'm out fully. And then basically those positions, like yesterday, the VWAP, SPY VWAP bounce, right? I took a major position. First of all, I shouldn't have done that. And I was sweating the whole time, and it went down few percent, like 3, 4%. And then the moment it hit like 7% or 8% for me, I had 20 contracts, and I did one trade for 10 contracts and one trade for another 10 contracts, and I was out fully, and the total was about 7, 8%. And then that positions, I did not leave any runners, and that those contracts hit, as you already said, it's like 80-85%. And it's kind of the same issues I've observed for most of my trades or positions that I'm taking. I'm having a very difficult time to get in the mindset of not closing out the position fully.
So I would say, because you're trading with about a $5,000 account, right?
Yeah, about 6K. Yeah.
6K. So I would say I wouldn't buy that many contracts. If I was buying 20 contracts with a $5,000 account, you're probably using what, 60 or 70% of your account, right?
Yes, almost. Yes, I would say that
So,
on that one position. Yeah.
So personally, the way my mind works is I would not be able to mentally handle that. And I also would be sweating the way you said you were. And so I would say I would just size down and it'll allow you to, not be as nervous. The reason you close that trade for 7-8% is because you were just like, whew, I was down. I'm finally in the green. You saw the dollar amount, you had 20 contracts and you're up 7-8%. That's pretty good. 20 contracts, almost your whole account. So your account was up nicely, but that was a dangerous trade because if it went against us, it would be really hard.
Like the Microsoft trade. I was with you on that, and that went down 20%. And I just thought of that, and I was like, "What if this goes like 20%?" The moment it went down like 4%, I was like, "What if this goes?" And it'll be like another that trade. So yeah.
Yeah. So I would say I would scale down. If you're trading $5,000, I would say 15% max. Everybody's risk tolerance is different, but for me personally, 15% of that is about $750. So I would say $750. So that would probably be 3 to 5 contracts if we're trading SPY. And then you're not going to make as much money as you are trading 20 contracts right now, but you will be able to get a better feel for the trade. You'll be able to see things a little more clearly. When you're in a position with almost your whole account, it's really hard to see things clearly. You're seeing it from a stressful point of view, from a, I really hope I'm right. I really hope I'm right. When I'm in a trade, I'm just like, all right, come on, let's go. Come on, go in my way. But I'm not like, oh God, I really, really hope that it goes my way.
I'm like that.
Yeah. And it's a dangerous way to trade. And with a caveat, if you're going to trade like that, then you need to be willing to take like 50-60% gains, but with the way that everybody's mind works is once you go a little red, with a large position, naturally your heart's going to be beating fast, your hands are going to get sweaty, and you're going to be just like really like irritated and aggravated, and it's going to be difficult for you to let the winners run. So it's not a problem with you or anyone for that matter if they get stressed out and they don't let the winners run after being down, because being down 5, 6, 7%, that's relatively normal. It's not every single trade. Usually as soon as we get in, we might see 1 to 2%, 3% in the red, and then it goes heavily in our direction. 7, 8, 9, 10%. It's starting to get to the point where I'm looking to cut the trade probably very soon. But it happens, and the best position we can be in those situations is being ready to just cut it without even hesitating. And the way to do that is not having a lot of money risk. If you're risking a lot of money, you're not going to want to cut that trade because that's a high dollar amount. That's a lot of money using 60-70% of your account, 20 contracts, cutting it for 10%. That's going to be a huge amount of your account. So I would say just size down. And then on the flip side, you'll be able to hold positions longer too. If you're only holding 4 contracts, try that tomorrow. The next trade we take, get 3 or 4 contracts and see if that helps you. And then the next time we do take a loss, it's inevitable. We'll take losses. The next time we do take a loss, if you have only 4 contracts, you're going to be like, oh man, that wasn't that bad of a loss, And then you'll be able to take another trade later on. But I'm assuming you have a cash account. So the other disadvantage is if you use all of your dollars for a trade that doesn't work out, well, then you can't take any more trades to make up for it. But for example, today with that SPY trade that I took, it was a 9% loss, and I used a half position size, so I wasn't sweating at all. And then I ended up being pretty green on the day. And that was because, like I wasn't, if I went full position size, or God forbid, like 60% of my account, and I was down 10%, I would probably just log off for the rest of the day. I would not be willing to take another trade, and it would really
Yeah, today I heard you mention a couple of times like I'm gonna going half position only. So I did the same. I just went with like 5 contracts today, and it was decent. I took a loss on that first buy trade, the call, but it was like the loss was like $80, not a big deal, and got another opportunity to cover it back. So
Yeah. And today, CNBC posted something about it being a very choppy day. So I didn't think it was a choppy day, but apparently a lot of people think it was a choppy day because of, we dropped and then popped. But if we look at, oh dang, I deleted everything. But if you look at the price action today, there were a ton of opportunities. So, and if anybody else has any questions, just raise your hand and then I'll pick on you guys next. But like for example, today, anytime we make a high or a low, this is just by habit. If we make a high and start dropping, then I'll have that high mark. Once we make a low and start bouncing, I'll have that low mark. And so once we break below that low, oftentimes we get back to it and reject. And it's one of my favorite strategies, one of my favorite setups. And so that was one of the opportunities today. Additionally, we had a little bear flag here, which coincided with this little supply area right here. We bounced here during the pre-market, and we bounced here during the pre-market. So I thought maybe we'd get into that area and reject. We had another, hold on one second. We had this little bear flag into the supply. We had another bear flag here. We had another bear flag here, which coincided with, I called this one, I said 371 rejection, and I wanted it to get like 20 cents higher, and I missed this big move. But there were plenty of opportunities today. And so, let's say we're 20 minutes, 30 minutes in, and you haven't taken a trade, that's okay. For example, and then here we started bouncing, create a little bull flag, another little bull flag here, create an ascending, oh, hold on, remove this. I'm just trying to show you guys, like, there are plenty of opportunities throughout the day, and a little ascending triangle here. I wouldn't take this trade because it's so close to the end of the day. But then right here, we have a little symmetrical triangle with a beautiful flush. It rejected right here at the same rejection area. Let's see on the 5-minute. Oops. Yeah, on the 5-minute, I believe I sent this to the group, but yeah, it also had a bear flag, so you could have taken the rejection or the breakdown. I think I caught the breakdown for that SPX. Yep, that's exactly what it was. I caught this breakdown. I only caught a piece of it. The contracts ended up hitting like 150%, but
I also caught that. That's how I turned green.
yeah, right there. Yeah. But yeah, so if we see, if you haven't made any money on the day, just be patient, look at the opportunities, keep referring back to the 4-hour chart and the 1-hour chart, and they will tell you a lot. Like for example, let's extend this to the left, extend this to the left. Yeah, for example, right here, we rejected and then we bounced and then we bounced and we flushed. I'm going to make this line purple so we don't confuse it. And then if we zoom into the day, it was that same area. We bounced here and then we flushed it and then we rejected it here. And so, I mean, that wasn't a clean rejection, but it did it. We also bounced there for, how much is this? Ooh. Hold on one second. The bounce was for $1.50, so from 371 to 372.5. That's a pretty strong bounce right there. I remember I was talking about a bounce there and I didn't take it, but for me, today was just a poor day of execution, and they happen every now and then. And I don't know why it was like that, but all I can do is come back tomorrow, come back stronger, and then just take the opportunities that are presented. So But yeah, so I would just go back to I would just size down and
Yeah.
yeah, that's all I would do. So I'm gonna just size down, and I'm sure that'll help you. It at least will make you not sweat in the position, and you won't be stressing out about the loss or the potential loss, because when you size down, the dollar amount really won't matter that much as much as it does when you're in a big position.
Yep. We'll try that strategy. Thanks again.
You're welcome. Anybody else? We got RG, Miguel, Isam, Isaac, Ismail, and Siam. Who else? If you have any questions, you can raise your hand. I can just unmute you, or you can unmute yourself. Let me see if there's a way I can just see unmute themselves. Yep, there's a way. You guys can unmute yourselves. So. All right, I'll stay on for another like 30 seconds or so, but okay, Ismail said, what are your favorite confluences to take a trade? Supply and demand, and then VWAP. Supply and demand with a bull flag, supply and demand with bear flag. So I like to use supply and demand. So if we clear this, just so you know exactly what I mean when I say supply and demand. So this area right here is a supply area. Right in here. As well as like right here, because we rejected it. Once we break above, we can take a bounce. Let's go to the hourly. Here's another one. This was the high of day yesterday, and we bounced right at it. And that was a supply zone because we kept rejecting it. The reason I wanted to swing calls, by the way, yesterday is because of this. Simply because of this pattern. An ascending triangle into the close, I feel like an absolute fool for not taking that swing trade to 200%. Jesus Christ. Could have made a couple grand, but whatever, it's okay. But yeah, ascending triangle right into the close. So I thought, okay, we should swing calls because there's nothing for it to do but go up, and there's no news waiting to be dropped. But okay, this was a supply area because we kept rejecting it. You could think of it as resistance. And then once we come back to it, we tend to bounce at the first retest, especially if we rejected that a few times. So we rejected here, 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 and then at the close, we had a little rejection. So personally, I like to use a supply zone rejection. So if we see, let's say this is a demand zone now. So we broke above it, it's a demand zone now. I would like to take a bounce in that area if we could see like a falling wedge. So for me, I didn't really see much of a pattern that I wanted to play here. In hindsight, we do have two bullish pin bars right here. We zoom in a little bit. These two candles are bullish pin bars. But I wanted to see consolidation in like a pattern like this. If we would have done something like this and then gotten there, I probably would have taken it. But we didn't. But for me, my favorite confluences are a supply area or a demand area with another point of confluence. So like yesterday, I said I wanted SPY to bounce at the VWAP in a bull flag pattern or something like this. Well, let's add the VWAP real quick. All right, that's what it was. It was on the 1 minute. Yep, that's what it was. So I wanted it to bounce at the VWAP and break out. So this confluence was a bull flag paired with the VWAP. I love that one. I love a bull flag into the VWAP. Those two paired together are usually really strong. Let me see if it was paired with an area of demand. Let me make this purple so it stands out. Nope, there's no hourly supply or demand on that one. Let's look at the 4-hour chart. Nope, there's no supply or demand paired with that one. It was just a VWAP bull flag combo. But I like that combo. Anytime I see a bull flag, let's say we get a really strong parabolic move. So we made a $3.50 move in the first 12 minutes. So $3.50 in 12 minutes. That's incredible. That's a really strong move yesterday. And then we start consolidating. The VWAP tends to be a really strong area for that bounce. That's an A+ setup for me. It's one of my favorite setups actually. But then a supply zone rejection and a rising wedge is another one that I really like. If we're gonna take some puts, let me remove the VWAP and I'll explain how that one works. Okay, here, perfect. This was one. Now, if we would have gotten up to 381, I would have definitely wanted to take the rejection because we bounced here once, twice, 3 times, and then we flushed. So the next time we test that area, I want to play the rejection. We could get it here in the next few days. I'll definitely want to take that 382 rejection, 381, 382 rejection. Another rising wedge into, there's no clear cut supply area. There is one kind of like right around here. Let's zoom in a little bit. Yeah, right here. So we kind of rejected a little above it. We got a little above it pre-market. But if we zoom in, we did reject it during the pre-market session. So this is on the hourly chart. We rejected it by $3.70. You know, that's a pretty good move. $3.70. That's a good rejection. We got above it and then ultimately, you know, ended up rejecting that area again. But yeah, those are my favorite two. Usually supply and demand paired with something, or a bear flag, bull flag at the VWAP, or a bear flag into low of day, a bull flag into hold on, let me explain the bear flag into low of day. So let's say this is perfect. Okay, awesome. This was low of day right here. So once we break it, I want a bear flag into low of day. Rising wedge bear flag into low of day for a rejection to the downside. And then if it's a bull flag, then I want to see, let's see, did we get one on this day? Yeah. We got the bull flag, but it wasn't into, it's not the example I'm trying to use. Okay, anyways, I'm not gonna keep scrolling, but it's just the opposite of a bear flag into low bit. Bull flag into high bit. But yeah, those are some of my favorites. Rising wedges into low day, rising wedge into the pre-market low, falling wedge into the pre-market high, things like that. So supply and demand is the same as support and resistance. So support and resistance, you can kind of think of it as the same, but the main difference is, let me show you something. So I sent it right here in technical analysis. Let me bring it over. So think of, okay, so support is this blue line. So support can be uptrending, resistance can be downtrending. Or if we look here, this resistance is downtrending. So that's not a supply area. If we're going to look at a supply area, it would be a line drawn from here all the way across. And so once we break above it, that's a demand area. But it's similar. But the main difference is, like this area isn't a demand area, it's a support area. This is a resistance area. So support and resistance can be flat, they can be diagonal, they can be different. Demand areas are just horizontal. So that's the main difference right there. And then with demand, you can see like how strong buyers are in those areas by taking a look at the volume. But you can also see that with the support and resistance. But generally, they kind of are very synonymous, very similar, but there's just a few different nuances. But the main thing is demand and supply are horizontal. Support and resistance can be horizontal, they can be diagonal. But yeah. You're welcome. You're welcome. All right. Any other questions? If you guys have any questions, just send them on over. All right, y'all got 30 seconds. It's 11:02. You have one more? Okay, cool. I'm here until you guys want to get off. So personally, I prefer on my phone. I know it sounds weird. But when I first started EBO, I had one monitor and I was actually training for my phone, sending signals, typing on my computer, and I got really used to that. And now I just have one monitor dedicated to screens, and the monitor is this big, so it's like what, 40 inches, 35, 40 inches, something like that. And then the other monitor is another 40 inch. I use it. Twitter phone interface is very confusing to me. Yeah, it is confusing, but just get used. You'll get used to it soon enough. But this other monitor I use for Twitter, Slack, and Discord. Anything else that I'm using is the other computer. So I'm looking at the charts like this, and then I'm doing stuff on my phone, like entering trades on my phone, just because usually I just buy it and market anyway. I just buy a market order. So rather than like clicking out of this, clicking out of that, I like to just have as many charts available as possible and then submit it on my phone. But yeah, and I usually just do market orders, so it doesn't even matter. All right. Any other questions? Yes, if you're confused with the app, I would just play with it. Maybe I'll make a YouTube video or something, but yeah, just go and what's the word? Just play in the app and just click different buttons, figure out how to do certain things, and I'm sure there's some good YouTube tutorials, but maybe I'll make. Oh, it asks for your password? No, mine doesn't, because in the settings, you can go to, hold on. So in the settings, so you go to the bottom right where it says more, click that, and then click settings, and it says, hold on. Security, Face ID, request authentication timeout. Mine is, it can be after 5 minutes, it can be always, it can be after 10 minutes, it can be after 2 hours, after 4 hours, after 8 hours. I always do only market orders. Yeah, for the most part. If I'm trading SPY, I'll just do a market order because the bid and ask is always just $1. But yeah, you can ask for authentication after 24 hours, whatever you want it to be. And so I'm the only person in my house that Who's gonna get on it, you know? And then also, there's one, I think there's one more thing. Yeah, that's it. That was it. But yeah, that would be annoying if I was had to put the password in. All right. Isaac said, "Siam, consider paper trading to get more practice with the phone interface." Yeah, it's a good way to do it. Buying the ask is almost like doing a market order. Market order, you might lose another dollar. So, but yeah, I either buy the ask or do a market order. All right. So if you guys have any questions, any additional questions, go ahead and toss them. You can unmute yourself. You can type them in, whatever you want. We got RG, no questions. Miguel, no questions. Isaac, Isam, Sayam. All right. Cool. If you do, just say I do, and then I'll wait. All right. Have a good night, Isaac. Have a good night, Miguel. Have a good night, Sayam. Have a good night, RG. Have a good night, Ismail. Have a good night, Isam. I think I got
Thanks,
everybody.
Mark. Have a good night, everyone.
You too. Y'all take care. I'll see you guys tomorrow morning. Good night, everybody. And I'll post this in the signals page so you guys can have it. I'll talk to y'all later. Bye.
Bye-bye.